Greetings, market rebels. Welcome to this week's macro measure. It is Sunday, June 4th, 2023, about 1 minute afternoon here on the East Coast. I'm Wayne, my partner Ryan's working on our market outlook for the week, or maybe he's even gotten it out by now. Let's get things flashed here and then we can move along. So we'll get our trusty disclaimers taken care of. There's the first one, and then here is the second one, intellectual property rights notice. And then we're going to move on to the final slide this week, which is this week's plan stream. I'm trying to cover all the stuff as usual, right? Just a super interesting market this year so far, and that was kind of brutal for the first, I guess, 6 weeks or first half of Q2. But things have really gotten very interesting again for the past few weeks. And we've also had a great, I think, first quarter in terms of interesting markets and also price action. So there, if you want to just pause and take a snapshot so you can follow along, please go right ahead and do that. And now I'm just going to reposition things and then we'll get going. So just please bear with me for a moment, stop the share. I will take this down to a more readable level, and then we can move this over here so I can get a good view of it and bring our share back on a different screen here. So yeah, so I'll go through everything, but this just happened to be up because someone asked me a question, I think, and I tried to get this out to folks in terms of this is the TNT, or at least part of the formerly TNT Rebel Pit Pro summary, since we had a recent renaming. It takes me a while to forget the old one and adopt a new one fully, but I'll just leave this up there. But you know, a lot of the stuff that we've been, I think, focusing on has been worthwhile. I think we've had a lot of things that we've been onto that have kind of played out more or less to our expectations. And that's pretty good, you know, when you can do that. It's not always the case, right? Sometimes the market really shocks you, like, well, I didn't see that coming. But fortunately, we haven't had that scenario all that often, and we haven't had it very much at all lately. And we did note last week that we needed to see things were still very narrow. They needed to come for other things. They might go into some other mega caps, and they did. There's a couple names that got mentioned there. Other ones, of course, participated. And they kind of did the old rotation, right? They didn't really do much with the semis, or especially NVIDIA, but then they went ahead and they started to do more other ways, right? And they brought other things along. And this is very interesting right now. So we did talk about how that big euphoria type situation could develop. And that really produced that late week ramp. So that was aided also by the jobs data. So let's switch over to that really quickly and cover things that way. And I think it would be helpful just to drop down to like a 5-minute chart here for that. So that shows better. So, but yeah, so here's the week, and they started the week out with this little gap up. Right, that because we had the 4-day week last week. Tuesday was day one of the week. They worked things down, and we had noted, right, that we thought it would be overbought, and more than likely they needed to do this. And it made sense to do it in the first half of the week because Avgo and the other other data that would be coming out would be the way to go in terms of something they could hide behind and then move things back up. And of course, this really sort of I've been very happy with the way a lot of our short-term takes have been and what they're going to do, and they kind of followed along with what we thought. Again, you know, it's not a prediction, hey, this is more of a, this is our most likely scenario that would make sense given where things left off the prior week. And we've done it again, right? They've left us off where we're in a very similar situation that we have been in, which is they really have done a real bang up job to ramp stocks up towards the end of the week. And this week, of course, they were also aided by what I would call the bogus jobs data, saying that in a non-political way. There's a lot of things you can look into it if you want. I don't have very much that I'm going to share on that. I will share one little brief thing here that came from Tom McClellan and other people, and you can just read this for yourself. But there's a lot of stuff that goes on, and it doesn't really matter to me what administration's in there. They're all trying to do the old sleight of hand, and I don't think that this is really that this claim has been borne out where things are this wonderful and things are really humming along. I just don't see it. I think and I just don't see, even if people want to rally the market on this great situation in employment. And there's been some really strange things too. I think there was one thing, let me see if I can get this for us while we're here, from Bespoke. They had put this out again, I think. And there was, this one right here. So this, you've got to go back a couple of decades to even get close on this one, right? Streaks of better than expected non-farm payrolls report. So this is certainly, right, statistically speaking, this is absurd. I haven't crunched numbers on it. I don't have those numbers at my disposal handily. But look, it's just not this. That's just, to me, like right away, like your spidey sense ought to be tingling a little bit there. Like, oh, there's something up here. This just isn't legit. There's something strange they're doing. But what I've read is that there's all kinds of stuff going on. So I don't want to get into those weeds, where this will already be, unfortunately, probably too long without getting into those weeds. But just know that there's a lot of shenanigans, right, going on. One of my favorite words that everyone seems to kind of get a chuckle at. But it is what it is, right? So we did finish the week messy and overbought, right? And because things got a little out of control, I think by the end of the week, they did perform their necessary maintenance, as we just discussed, right, on the early part of the week to set themselves up for what they set themselves up for. The recent strength ratings that we had, which was the Qs, then the SPYs, followed by diamonds, then IWM, there's little change there. The good news is, right, that the spiders, and I think we haven't covered this enough, so I'm going to just spend a moment covering this. Let me try to get us out of this, though. I don't like when we switch over to percentages. It doesn't really change the visual aspect, but at least you know the numbers. So, we talked about this whole situation, right? Incoming uptrend, where we were in terms of this range we had been trading in. When they don't allow much of a correction to occur, and you have an incoming uptrend, the assumption will really be that this breaks out more likely to the upside. And that's just the way most people, I think, would read it. I mean, that's how I would read it. That's how I learned to read it when I was, just from trial and error myself. And I think that's how a lot of people end up reading that. So we did get that, but the Qs have really gone out ahead. We are very, very far ahead of. They look similar, right, where they left their consolidation, but we don't have that drawn as neatly, I guess. But it's in terms of being wider, we don't have this other form of consolidation. But look, they worked this thing up more strongly out of there. So I think that it's still that way. But the SPY, to me, that's where there's potential now, because it's lagging behind, right? So if you're a bull, and again, I'm not, but if you're a bull, yes, things are going well and you might have more room here. And that really maybe opens up the sleeper scenario that we may as well talk about now, that I've been kind of jokingly calling it the sleeper scenario for a while, but we've talked about it on cocktail hours, on Fridays, etc. Try to get a good view of it, though. And I think I may have covered it last week, but my contention, I really don't like the way that I can't get a better zoom on this. It's so frustrating sometimes. But anyway, this is where we are. And that really makes that sleeper scenario kind of like maybe a front burner issue, right? We've been talking 431 and change, 432. I think I switched to, just to round it up. This high here, that to me is, well, it's the point at which it would really probably get a lot more money coming in, is my guess, just from having seen this kind of stuff so many times over the decades that I've been doing this. And at this point, right, we had this broadening corrective pattern. They put in a higher low here versus down here in October. And then, right, there's this higher high versus these highs here. And so then you get this higher low a little bit here. And then, right, you get this follow through and they start to really change the trend. You were starting to see maybe the trend change right here, right? You can't really know until you start to see higher highs and maybe a higher low get put in. But this is where I guess you would say that's where you could really start to sniff out, maybe there's something here if this starts to lift from here. And it did, but that took out this high, right? And a lot of people became convinced things were great. And that's where you had a couple of weeks where people were buying, they were distributing, and they slammed it in their faces for again. Then you come back up, you hesitate. We were kind of lived through a real torturous time there. And then finally they've been initially they had a little false breakout. They brought it back into the range, found support at about mid-range, and then started to run again. So now, right, people are like, okay, there's higher highs and higher lows being made. This was another higher high with what we just saw here. And now if it takes out this really second part of the expanding, you could call it, I guess, expanding wedge. Some people might call it a megaphone, whatever you want to call it. Doesn't matter to me. But this would be the first high that was part of that taken out. This would be the second high. And that to me is where there could be a surge still, where you could get I'm ballparking it. I could be dead wrong that it might not even happen for all I know. But I've been thinking that what happens here is maybe there's more capitulation, more money comes off the sidelines, more people talk themselves into everything's wonderful. And that's where this sort of sleeper scenario bull trap would potentially be really initiated. And then you get maybe a 1 or 2% burst. I don't know, maybe more. And then once that sort of plays out, that really could be I don't know, that could really be the end of this potential counter trend move. Because if that were to happen up here, you still would have a few highs that were not addressed, and you could potentially roll over from there, and then you could go into another leg lower. So I'm not, again, you know me, if you've been around for a while, what I like to do is not dig my heels in on forecasts. I think for new technicians, I think the whole idea where you have to make the call, right? Everyone expects the call, or this guy called this, that gal called this. That's fine. I can sit there and do projections and all that stuff myself. And I used to do them a lot more. But when it comes to the short-term trading, you really don't want that bigger picture stuff to get in your way and sort of restrain you from participating, right? From making profits, right? Having success in the short run. And most of what we do is short-term oriented in the services that Ryan and myself and Greg manage for Market Rebellion, the active trading services. So I'm not predicting that once you get up there, you definitely fall. I would just say that to me is that these guys are very crafty, to say the least. And I think they are very well informed. And I think they trade on information that would surprise a lot of people. And I think they kind of know things in advance. I don't even want to go into all this, but that's my sleeper scenario. For if you've never heard me talk about it before, it's that this high gets taken out. There's probably 1% or 2% of squeezing, maybe beyond that, with just a gut call. And then that sets the stage for, right, really having drawn a lot of people in, having a lot of people cry uncle. And then maybe, right, because the market seems to be so out of step with macro realities, not only domestically, but abroad, that's where the bull trap is really ignited and the final phase. And that really maybe sets up the nearer term rug pull. Now, related to that, there is a little bit of a complexion change in the sense that suddenly, right, things were looking dismal. This is why you have to be willing to change your mind, and this is what a lot of people get mad at, that people that sound bearish or bullish flip around. But that's the right move. If you ask me, you've got to flip around. Because why, if you're trying to make money in the short run, how does it behoove you to have A, gotten something wrong, and then B, sit there and insist that it should have been right? It just doesn't help you, right? So you need to just say, well, it's not about being right or wrong. You might still be right. Like if you're a bear right now, you may end up being right, but maybe you were just early, right? And that's what it is. It's all about sort of timing and going with the flow. So I'm looking at it saying, well, the diamonds, they brought the diamonds along, right? They brought IWM along. And I think it's a good sign, right? If IWM does start to go. I'm not convinced of that. Let me get us a better, shorter time frame. So I'm not really convinced that IWM is about to go. But somehow, right, they've used tech to be the engine that's pulled everything along, the Qs, SMH, some of the communications have pulled things along. But this is just, I'm getting, you know what, I think somehow this indicator here is causing me to have trouble. And I'm going to get rid of that comparison line for now. That's sort of frustrating that's what is maybe causing this percentages and this less than stellar plotting I'm getting on Thinkorswim here. So yeah, so there's a better look. So look, this thing based, and now they have a chance to do some work with it. And I really wouldn't rule that out. I mean, if you've been with me for a while, you know that this is not, there are some flat lines and things from back here, but now that you're above all the SMAs and you really broke down from here, I don't see why you couldn't tack on another few percent just to come back to where this broke down from. There's kind of clearance there. Technically speaking, that's the term that I use. There's not a lot in the way. So if it wants to, it should be able to do something. And that the whole problem though, with these things joining the diamonds and IWM is this sustainable? Is this really the way that you get started with something after you've been basing, that you just panic your way in? So that's my big question, right? There were some major sector ramp jobs that you could see, like I'll just do more of this in the next video, but you could see they came after, these have been the big areas. We know that, but they started coming in for stuff that was really languishing, like XLF, XLE. They even came in for real estate. They came in for healthcare, right? This is the second half of the week. Suddenly XTN, so everything became a world beater. And I think this to me is a very short-sighted way and they even came in for XLU, which had been really getting smoked. So this was really like a risk on, or maybe short covering type thing that just got aided here. Maybe there was already some capitulation we're talking about that happens under sleeper scenario, but maybe we already started to see some of it now. So I don't, if I'm a bull, like this is really not how I want a sustained rally to begin, with this gap, this dramatic gap. That to me sort of sows the seeds of destruction right from the start, because either within a few days, right, there could be some negative geopolitical stuff that, you get long here and then they pull the rug on you, close the gap, and then the real rally begins. So I never like to see such gaps and just kind of like panic buying. And so I don't know if this is sustainable, but we can't fight against it yet. So this is now, right, getting into the current assessment, the third year of the presidential cycle that we've been discussing, right? That's still kind of tracing out where they get this really good performance. We're supposedly in that sweet spot until maybe mid to late July. But as I think I noted last week, the mega caps tend to, even when they're having the last 10 years, even when they're having a good year, which as you all know, like that's really where all the action's been, and some of those super large mega cap names have really pulled everything. Now you have a situation where it would make sense in my mind for them to start giving something back. So they have to really go ahead and move this rally other places, which was what we talked about in Rebel Pit Pro. I think we talked about it in these videos last week, that they needed to sort of fan out because they'd already gotten things overdone. So let me just show you a couple tabs that I've got ready that I wasn't, again, the bespoke I wasn't expecting to talk about. And then we had the McClellan one I already showed, just about the sleight of hand that's going on. So again, non-political, but wanted to show you, since we did look at this, that there was such a big jump right across the board. And we were saying that there's nothing happening here. If this is so wonderful, why are they not coming for more things? And they really did. So you got to give them their due. The something that was lacking, right? Suddenly it was like, oh, we got to start going after more and more, because I think they've got this game virtually perfected, where after they've milked the mega caps for as much as they can, even against reality, which I would say they move things against what I think is reality right now. They need to broaden things out if they're going to then sell into the mega caps now that they mark them up. And once they sell into those, okay, they don't want to see the market go down. So how do you distribute after a massive move without having people panic that the market's falling? You let everything else lag, and then you start going for that and they're making everyone think everything's, on its way. And it very well may be, but at the very least, I think there's a lot of games afoot. But you can see that the percentage stocks above 20, 50, and 200 all began to improve. This is really not near, nosebleed levels. The only one that really maybe has gotten up there closer to higher levels is over the 20, which you'd expect, right, to get there more easily, given how how stretched stocks become at times from longer term moving averages, which we'll cover actually. But so you're not quite there. I don't think there's anything insane yet on this view. This is also very interesting that we should cover. This really shifted around, where sitting tight last week was a low probability. Somehow they've got it now that's the odds-on occurrence when we get to the FOMC next week. So we've got the third year is still preserved. I don't think I can agree with what's happening here, but the market is what I would defer to. To me, I don't know exactly why or what they're attributing this major shift back to sitting tight. It might have been some comments that came out from one of the Fed speakers before they went into this quiet. I think they're in a quiet period now leading up to the Fed meeting, but I'm not really buying that. To me, like I would not. I'm saying that I think this percentage is higher than 25. Is just the best way to put it. I don't know where it is, but I definitely think it's closer to 50 than it is to 25. So that would be my way of sort of noting that. We talked about the McClellan part of it, and so they did some interesting things. I'm going to cover a few things here. Remember, this is counterintuitive, or you could say that this is contrarian, however you want to describe it. But 15th week, we've seen pessimism above average. Okay, so this whole thing, the way that I feel that I've expressed, again, not trading it that way, but that's exactly how I've felt in terms of if I were none the wiser, right, that I didn't realize how these guys really operate, and I was going on just a macro take, economically, I would be pessimistic too. I think a lot of what we've seen, which I did note, is that we've seen basically, right, we've seen, I should get to that though. Let's make sure we're covering everything. I'll get to that other comment there. But one thing that's interesting is that this is the largest, I think, inflow ever. It's a record into tech. So if you want to talk about things, there's some bad sentiment out there. There's a lot of bad stuff, I think, going on. But this is the reality of, if you want to believe Bank of America Global Research, this is how much money got jammed into the market last week. I mean, that's just staggering when you stop and think about how this dwarfs everything. I mean, this has to do with how these leaders have mismanaged everything, but you get the idea. It's extraordinary. And I'm going to talk more about stuff like that. Despite that, because I think there hasn't been this across the board participation yet, even though it did improve, you're still not even in extreme greed, right? So if you look at that and look at where you are on the timeline, yeah, are you getting up there towards where things have been a little bit, you could get a little bit more towards this upper end? And yeah, you could. I think so for sure, but it's not extreme yet. Doesn't have to get there, but that's just a good thing. And I think that's this is an imperfect measure for sure. but look, it's up there, right? It's up there. It wouldn't take much. The sleeper scenario could, in fact, bring it to here. The one where they start jamming a lot of other things. So we'll see about that. May as well take care of these while we're here. Talk about complacency too, or as well, I should say, right? So this is your current put call. And so this is extremely low. You've got to go back a ways. There's other measures. I think, you can go back all the way to here, and just, I think this is maybe could be just prior to, I guess, all hell breaking loose in the COVID year, C19 in 2020, early 2020. So that just gives you an idea of where you are. And then the 5-day, I think, moving average on this is also plumbing depths, which I don't have, but I didn't want to have too many tabs. The other thing is, right, despite all the hoopla and all the celebratory stuff that's been going on, and again, I love the idea that we're celebrating. I think that's great because we got some really great movement and we traded it. So I'm glad everyone's happy. But this is something, that you would say, well, how's that really happening? But there you go, right? You've got these new lows eclipsing new highs for the 13th straight week. So this is why I have a problem with all these perma bull folks, just like I would have with perma bear folks. If the roles were reversed, it's just people just get dug in and they're just unwilling to, I think, do what's best for them because they just get so invested. They get their ego so invested in it. It's probably hard not to when you spend so much time and working on things, and it just, I don't think you should buy into, I need to make the call or I need to do this. Just take what you can there in the moment, and just be smart about your risk management and have all the risks, or both bullish and bearish risks on the back burner, so that you're not caught off guard by what's happening. But that just gives you an idea on a few tabs there. Let's go back to the charts and I'll talk more about it. So I think things have gone too far, too fast. I'm going to try to go in order here. But what I would like to do is just show you what I think this will reflect over. So just bear with me. This is going to be, where's my, maybe this one? Or just, I'm sorry, I thought I had this thing. It might be this one. Okay, yeah. So this is really what I meant by the colored dots. If you kind of see that percent greater colored dots time. So this is really about moving up too far too fast. And so what I did was I'll go through a couple names and I'll show you, right, how far the percentage the stock price was very recently from the 200-day moving average. Okay, and you'll see, I think, pretty convincingly that this goes back 5 years or more, I think. And you can see we recently were at a record stretch in NVIDIA. I think with Avgo, you're also at a record stretch, I think. That goes back even more, 10 years. Maybe we were going back 10 years in NVIDIA as well, and I didn't realize it. But anyway, the point is, this is where you are, right? This is by far like a record stretch. This to me is why I'm moving us to DEFCON 4, because I don't want to for everyone to think that we're still going to be like bulls without all that much worry. I think now you can be a bull, but you have to start worrying about the duration and the stretch, the magnitude of this move, how utterly mad this is. There's meta for the last 10 years, or as far back as it will go on this view. There you go. I mean, this has gotten a little, I mean, to say that it's gotten a little ahead of itself would be an understatement. Amazon, not so much, right? Not all of them are like that, but certain things are like that. I'll check Apple and Microsoft for us, but even Google up there, certainly not the highest, but you're definitely right. You're up there in terms of, other than the post-COVID, like I always say, $7 to $10 trillion worth of influx of capital into, I guess, the economy, but a lot of it seems to have gone into the market. Anyway, the stimmy checks, the whole rest of the madness that went on back in those days. We'll take a look at Microsoft and Apple just to kind of cover some of these mega caps, see where they are. And there's even Microsoft, right? So that's up there. Maybe you're not at the highest high, but you are up there. And then Apple will be the final one we'll take a look at. But I just wanted you to see, we could do more of these, of course, but that's probably beyond what we're trying to do here. Apple, not so bad. So that's the good news, I think, for bulls, right? Where Apple's gone haywire, much more haywire than this, and it's the biggest name. But you can see that a lot of those are quite overdone. So I think that's your problem. I think they immolated the VIX, right? They just set that thing ablaze. That thing got wrong chart, dummy. We'll get to this more readable chart here. And so the VIX, as we said, we kind of talked about this and said, I think it may have been in Rebel Pit or UOA Pro, we talked about this, but it was kind of like, if they pull off another late week ramp job, we could finally get some, this thing could really crack finally. And that's actually what happened. So you've got to go back to, it looks like here, that is what date? It's, yeah, so you're going back to the summer of 21 to be able to compare. So that gives you an idea just how battered the VIX is. It's the lowest it's been in not quite, but nearly 2 years. So just think about that, right? That's really a smashing. So for the folks that are in the Phoenix portfolio, Ryan will probably end up talking about this, but yeah, I think there's you can start doing some smart things there. Now, having said that, there's a little bit of a mental prompt. I don't know if it's going to shut me out on this. I hope it doesn't, but it might. Let's see. There was, yep. So here you go. This is what I wanted to get to. So this is something that we picked up on the UOA. There's over 100,000 of these 19 July expiration 26 calls that were bought, somewhere near 90 cents, right around where they closed out. So just think about that. Somebody stepped in and said, okay, VIX has been crushed, lowest lows in about 2 years, massive stretch in these names like we have never seen or should have rarely seen over the past 10 years. And domestic and global macro, not all that impressive, at least at the moment, from what I can tell. And I'm stepping in and I'm doing it big. So I just thought that would be worth a share on that, because this is one of the reasons why I think we have to go to DEFCON 4, and you've got to really now start thinking a little bit more about the risk side of things. I still think what we saw with the jam job in this, to me, like I said, just to reiterate, all these things suddenly catching on fire the way they did with the gap up. I think that's more about plumbing. I think that's more about, panic buying. I think it's more about the inflows that we saw. Someone decided to hit the button. I don't know if they were covering, maybe they were reversing, maybe they covered shorts and then went long, but it was really remarkable. And against this, right, I still don't think the charts look great yet. They certainly look better that they were going up rather than sliding lower. But again, I don't think this looks great. This is not how I would want to start out a legitimate, sustained, longer bull market run. So we'll see what happens there. The AI thing, you all know that this is the happy talk. I think it's gotten way ahead of itself personally. But again, as I've said many times, right, for me, I wouldn't fight against that yet until, right, I don't want to fight against that and get steamrolled. I would just wait until you see signs of exhaustion and maybe some momentum reversing, and then keep that trade on a short leash, be an aggressive roller. That's what I would share there. I still think I've seen more stagflation continue to be talked about. People are coming to that conclusion. Not normally something that's great for stock prices in theory, but I guess every dog has its day. There's buybacks going on. There's gamma squeezes. As we noted, the sentiment's awful. People are invested. That's creating FOMO. The old YOLO crowd's back. I've seen some UOA to tell me that they're starting to nibble, or at least trying to. There's mechanical buying, there's squeezing. And so I've seen UOA names where there's low float, high short ratios, things like that they seem to be coming for. The CTAs are, I guess, being flip-flopped, and they're now, capitulating and becoming buyers. So, and there's a big thing that I can't go into because we're already long here, but liquidity is set to become a headwind rather than a tailwind. That's what I've come across. So getting back into the charts, and again, I picked the wrong one out of habit, but getting back into the charts, I would just say that, look, you've got the spiders. If they are able to start rotating this, the spiders, the diamonds, the IWM, they should play more catch up if the Qs are able to even just tread water, right? So if you think the Qs tread water, they really start to get this going, there's more room before this stuff. The rest of these things, there's plenty more room in those. So I would say keep your eyes on those this week, if they're able to keep this rally going, and that could be where you get some really good opportunities, because this thing fans out, broadens out, and they're just bringing more people off the sidelines. Do remember, though, that we're basically on repeat in the sense that we ended the week overbought. Like right now, for example, just talking about IWM, something that looks good, and a lot of these sectors were the same, a lot of names were the same. Right now on the 1 hour chart, my RSI reading is 78. So that's pretty darn high for the 1 hour. Now, the 2 hours also near 72 or 73. And that's not, it doesn't mean it can't keep going. It's just that, like, look, if you get into here, you've got to be smart about getting in at those levels already. I think you could get a little bit of a push maybe on Monday. And then if they don't push it all the way, they could, but if they don't push it all the way, you could get a little back off down towards that 200 there in purple, which is probably hard to see it better there. So maybe a little bit up, back it off, try to find support around the 200, the 100, 150, which are there. And then if they're going to try to get a late week rally going again, then maybe you get that. That would, again, be the same scenario, which is why I'm saying we're stuck on repeat. I still want to just reiterate that from what I've seen out of Europe and Asia, I don't think things are stellar there as well. But we have to just keep focusing on the price action. I talked about my sleeper scenario, that we're kind of on the doorstep of that, right? This I've been waiting for off and on, like thinking, okay, it looks like they might try that. Then they didn't, and then it looks like, oh, that looks like it's out of the picture completely. And then it wasn't, right? So they brought it back. So that's what I'm looking at here. And again, my scenario might just be hooey, in the end, it might be like, no, they just steamrolled that. They steamrolled the next high. They steamrolled the next high because we're really going back into a bull market somehow. I still don't understand on my simple level how all these things that were so dependent upon extremely low rates for financing. I just don't know how you move things up as quickly as the Fed did to the levels that we're at now, and how that, with the inflated prices of everything, big ticket stuff between homes and autos, etc. I don't know how that doesn't impact anything. But again, I'm just a small timer, so what do I know? I would just say, look, we said last week we became more toasty. You're definitely more toasty. Right now, I'm going to flash more numbers. Right now, the SPY 1 hour is on 76. The QQQ, I will flash the 1 hour or 2 hour. Let's see. The QQQ is on the daily. It's 76-ish right now. So that's very high. That's a very high reading. So why can't I get a lesser? Yeah, there you go. So yeah, we're on 76 and change right now on this. So you got to be careful. The weekly is already overbought here. Okay, the weekly chart is already in overbought status. If I did something like, let's see, we've got diamonds. Let's take a look at them where they are. they're also short-term overbought. The diamonds on the 1 hour are at 79 already, right? Because this is just a remarkable couple of days. So just be careful if you're. I'd be a little more careful trading the long side out of the gates. I think you've got to be careful. Look, hopefully they'll be smart for a change, get a pullback, prove that what was resistance is now converted to support, and then we get more of a bounce that we can get a good ride out of more and more stocks. I would love for that to happen. That would really be great. I still don't see bullish drivers, but remember, other than the Apple, I think developers conference, which starts the week, I think it starts somewhere. I want to say maybe like 1 p.m. Eastern, maybe like 10 Pacific. I don't remember. It's something tomorrow, kind of like middle of the session is what I remember. And we've got the lead up to the Fed, but you're in the quiet period. But yeah, if they can get, Apple's not that overbought in terms of the colored dot view that we took. It's got more room. I've got a resistance line that a lot of people laugh these things off, and I continue to use them because they, to me, are very valuable. But this thing to me has another 5% before you even start thinking about, could it have trouble? And that, there's no reason why it couldn't stop there. So Apple alone, if they decide, now I'm not predicting that. I have no idea. I'm not really like an Apple expert at all in terms of the fundamentals for sure. But yeah, I think you've got to realize that alone could be a big mover that keeps a lot of the indices buoyant and allows them to take some of the oversoldness out of other things and mask, basically use Apple to mask the fact that they're slapping some stocks down. That's what you've got to be, I think, on the lookout for as a possible wrinkle this week. And but once we get through the Fed, I don't really know what to me is out there that becomes the next bullish catalyst. Maybe there is something, and I'm not seeing it. Maybe they're going to be excited about the buybacks delivering a whole nother quarter. About 6 weeks from now, there'll be a whole nother quarter of wonderful earnings beats. And as we've talked about before, if it was fairly estimated, you'd have 50% beats, 50% misses, but we tend to get about 75% beats. So it just gives you an idea how that game or part of the game is rigged. So I think that's probably where I need to clip this for now. Don't forget, VIX was immolated. You've got the dollar DXY, which the dollar is moving up again. And it did take, I think, a breather on Thursday, but they started to come back on Friday. And that, again, would be something I'd look at as, well, I'm not so sure that's wonderful if it keeps going. And then the other thing that really I don't think would be wonderful would be if yields do something similar, which the chart's somewhat similar, obviously not the same, but if they keep moving up as well. So yields have really turned around here, and they are really clicking off more bullish behavior the way that I look at things. And because of that, I think you've got to be on guard, because this thing making another push, attacking this and maybe coming back all the way back towards the highs. Again, don't see how that's really a great development. It would be good because it would be good for me, the way that I'm positioned, but in certain things, but I don't think it's really a great development for bulls, especially where they've got things. And just remember, I don't have this data. I think I'll end on this. I don't have the data, but the valuations that I did mention, that the valuations are extreme. Ryan might have something in Market Outlook that he came across. So check that out, because I think some of these tech valuations are not quite right 1999, 2000, but they're getting really up there. I think he found something from, I want to say that Tavi Costa guy on Twitter, maybe, that he found something. But anyway, I would check that out, because again, it's not really timely in terms of, hey, things are really super overvalued, I'm shorting here. I think what it does, though, is it has you appreciate where you are, which is, I think, one of the biggest questions you need to ask yourself all the time. Where am I in the grand scheme, right? Where am I? And if you can pinpoint where you are, I'm in a market that's still acting bullishly, but it's very stale, right? Or it's getting towards the ninth inning. It's definitely not the first inning. I might be in the seventh. I might be in the eighth, typically, and those are the things you've got to keep track of. And knowing that, this like buy cycle or sell cycle is getting aged. That's very important to me. I do that. You can see I've got a counter on here for that reason. So I know, right, how one side's basically been in control and for how long without really having to go back and sort through each candle to determine that. So when things get stale, they really they can be a problem. And a lot of the overbought stuff that when I've overlaid some of these things, it's pretty devastating in terms of like putting vertical lines on things where when you go compare some of these things to times in the past, the outcome just generally hasn't been good thereafter, right? So we're getting close to those points where you're hitting on different measures, you're hitting things that tell you that most of the time previously when this has happened, it hasn't been good for the stock or the index or both in this case. So I'm going to end on that. Be smart about what you're doing. It's time to really be smart, really be respectful of risk, because I think the risks now, due to this overextension, the magnitude of this move, the stretch, etc., have really built up. And I mean, I might be moving to DEFCON 3 if they push the sleeper scenario. And once we get to 432 and SPY, I might then go to DEFCON 3. They push it through there and by a significant amount, I'm probably going to go to DEFCON 2. And then we'll see what happens from there, how stretched it gets. But I think it could happen. I mean, it could happen after all the talk. We've been talking about this for most of the year to actually be there finally, or maybe, we're only about 4 points away. So it's only 1% away from maybe initiating that sleeper scenario that could play out. So on that, I want to just say thanks for tuning in. Sorry about a little bit of the rambling, but there's so many thoughts. I try to grab so many things to talk about that I think are important. There's so many things I always have to leave out, but at least hopefully something to share with you today will help you out this week or in some week in the future. And I want to wish everyone a very nimble week of trading ahead and good fortune. Thanks again for tuning in.